Hey guys, it's Platt, and today I'm going to be talking to you about the importance of investing. The reason that it's such an important topic in our daily lives is because if you invest correctly, it can set you up for a great future. And in this video, I hope to share with you some of my personal strategies and tips for you to make the best financial decisions for yourself. My hope is that you watch this video until the end, because I'm going to be covering so many different topics throughout this video, and if you miss one, there's a good chance you're missing out on an important investment strategy that you can start using today. So please watch until the end. At the age of just 15, I actually started investing. I didn't really know anything about the market. All I knew was investing early was really important. So with the help of a financial advisor, I actually put a lot of money away just 8 years ago. Today, looking at that investment, it's almost double what it was back then, which is phenomenal. Really, this example visualizes the importance of early investing, because any money that you can save earlier has a good chance of being either double, triple, or quadruple the amount of your future invested money. So you don't want to miss the opportunity of investing today. So often when people talk about investing, they're really interested in the topic. They want to know more, but they think it's a little too complicated to actually get started into. Nowadays, you can do it with a few clicks of a button through your phone. People often think that retirement has to be set at the age of around 60 to 70 years old, and while in a lot of cases that might be true for people, it definitely isn't a requirement. I think society kind of sets the standard that that's around the age people should be retiring, but it's more so based on how people are investing and people just not really putting in the extra effort to save a little bit more and maybe have a plan outside of whether it's a 401k or just a normal retirement plan. That's why it's so important to start learning these topics now so that you can set yourself up for the best financial future. My hope is to actually retire within the next 10 to 15 years. And you might be saying, Platt, you're crazy. There's no way that's possible. I'm only 23 years old. But it is completely possible. It's just based on how much I'm willing to save and how frugal I actually am in my life. And with this in mind, I actually save over 70% of my income. Now, before I talk about what investments you might want to look into and how you want to go about it, I highly suggest that you set up a 6-month emergency fund. Just in case anything goes wrong, whether you lose your job or anything happens, you want to have the 6-month emergency fund so you're not taking out from your investments and you're not needing to worry about what's going to happen. Having this 6-month emergency fund will provide you a great amount of security, which is phenomenal to have, but also it gives you the certainty of not needing to take out your investment. When you do take it out, you have to pay capital gains tax on it, and you don't want to pay that yet because you want to push that off as long as possible because your interest is going to be accumulating interest, but if you start taking it out, then it's not going to be able to receive the same benefits. So it's really important to have that 6-month emergency fund. So now that you have that emergency fund, just in case anything goes wrong, I highly suggest that you start investing today. When you go through your expenses, you have to make sure you are factoring in everything when it comes to how much you can actually save. To be honest with you, for me, I see it as every dollar that I can potentially save could be $10 in the future. Also, based on the history of the S&P 500, we can assume around an 8% increase every single year on average. So of course there's going to be the down years, but overall, we're going on an upward trend into the future. Nothing is guaranteed, but I personally feel very secure in my positions. Now, when it comes to determining how much you can invest, I know most people aren't going to be able to invest 70% of their income. You need to think about your current situation and how much you actually can invest. How much do you value your luxuries of today versus your financial securities of the future? The one thing that you want to consider is trying not to get stuck in a position where you're kind of sporadically investing, like $100 here, $1,000 there, because typically people get out of the rhythm of investing. You want to determine a pattern of investing that works for you, and you want to make it as automated as possible. Investing either $500 a month or $1,000 a month, whatever you can do and you can make work with your current income is wonderful. Put it in your calendar and make it consistent, because that is how you reach financial security in your future. Now, when it comes to actually pulling the trigger on an investment, you really need to think about all the different opportunities that are in front of you. Personally, if you don't already, I highly suggest getting a Roth IRA. This is because there's so many tax incentives that are associated with it. How it works is you put in post-tax income. When you put it in, then any interest that you make on that money is going to be tax-free when you take it out at 59.5. So it's kind of like a secure way to put money away and also receive a great tax incentive. So this Roth IRA, it is limited to $6,000 a year as of 2021. However, even if you just max out that every single year, this is going to be a great financial start on your financial journey. Now you might be questioning, where can I start a Roth IRA? How do I start investing? And that's a great question. Personally, I suggest Webull. I put my affiliate link down in the description, and if you deposit $100, you're going to be getting 2 stocks up to the value of $1,400 just by joining the app. Webull has the IRAs that I've been talking about earlier in this video, and so I highly suggest you use their platform, as I use them personally, and I find a lot of insightful information just through their apps. So again, if you want to sign up for Webull, the link is down below in the description. Now let me just review some different tips that I have to help you make sure that you're making the right decisions when it comes to your investing. I'm telling you right now that trying to predict the market or buy in when the price goes up or sell out when the price goes down is not a great investment strategy. Pretty much every time I've sold my investment right after there was a peak in the stock price, and I missed out on potential gains. To reach your maximum benefit, you're never going to really want to take out your money. Overall, over the course of any 20-year period, the stock market has been far, far in the positive on the other side of that 20 years. So no matter what price point you're buying in at, you want to buy consistently so that over time you're buying towards the medium price. Now you're going to be really inclined to start selling as soon as there's that next crash that's probably going to come in the next 10 years. But I'm telling you now that that's just an opportunity to expand your investment, because chances are within a couple of months or a year, that investment is going to go above and beyond what it went down from. So when it comes to investing, make sure that you're committed. Don't think about what number or what price that stock or ETF is on a particular day. Just think about consistency and continuing those investments. Anyhow, thank you so much for watching this video. I hope that you learned something, but at the very least, I hope you have a wonderful rest of your day.